Tradesplin. My name is Powell. I'm CEO and founder of Tradesplin, and today I'd like to go over current market conditions and trade of the day. Before we begin, please take a look at the disclosures. Trading stock and options involve risk and not suitable for everyone. I'm not a financial advisor. I'm not here to provide individual advice. I'm here to show you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, so let's take a look at the current market. I'm looking at the stock forecast toolbox, making prediction for the next 10 days. This is our flagship product. Currently, looking at the spiders, we see slightly negative bias heading into today's session. Everybody is waiting for the FOMC meetings and Jackson Hole meeting this Thursday and Friday in terms of direction of the interest rates. And I believe that that will create more volatility in the market. As we approach this meeting and FOMC decision, slightly negative bias, overhead resistance, again, 50-day moving average around 294. Support is currently is around 285, and we've seen 282 as being the low for the months of August. Now switching gears to a more of a longer term model. This is a seasonal chart, provides the results of bulls and bears model that runs on Sunday at 6 p.m. This model is optimized to make longer term predictions. So now we're looking into the 50-day out, so end of October. Towards the end of the October, model sees 60% correlation and 3 out of 4 are higher. So that's a relatively strong buy signal, meaning that short term you can expect volatility, potentially retracing to 282 support level, maybe overshooting to 280 or 278 where the 200-day moving average is. And then overhead resistance is still staying at around 294, 295 level. But as you approach in October, potentially short term, there's more volatility to come in September, early October, and then end of October, end of November, classic rally, end of the year rally, and I think that pattern will repeat itself this year also. Short term, looking at the Bollinger Band, again, support is at 282. I think that support is in place. We haven't breached that in 2 weeks. Potentially overshooting to 280, depends on the FOMC meeting this week and interest rate. If there's not enough stimulus and rate cuts, potentially market will overshoot to the 280 to 78 level. So what drives the market? Again, FOMC meeting, that will be tomorrow, 1 o'clock. Please review your in-the-money option position, especially the one that expires in September, to make sure you are prepared for the volatility, potentially rolling this position to further into October and November. And again, overhead resistance 293, 294, support is around 282. Monthly trader model, we have different models at Tradesplin based on the period you're trading. So we have active trader, this is for day trading. We have weekly trader for if you hold in position for 1 week. This is a monthly trader. This week, signal was published yesterday on Monday. You're seeing we're taking a long position in American Express and credit card processing. And again, this is more of a November position with the assumption that short-term volatility might persist, but long-term we will retest the 52-week high by end of October, end of November. Looking at the trade idea for today, we have several signals in biotech and big pharma, Amgen, Baxter, Johnson & Johnson. All of these signals we trade in the live trading room. I decided to go with Baxter. I think short term we have a strong signal to the upside. So BAX is a trade idea meant to be short term, either day trade it or hold a position for a few days. But short-term momentum is to the upside, currently trading right at the support 87.35. Not only do we provide trade signals, we actually trade them in live trading room. You can see we've been averaging 75% accuracy. So I encourage you to review all of our trades, short-term and long-term trades in our live trading room. If you're a lead subscriber, we actually give you access to trader log and SMS message. Every time I trade, you get a message and an email that shows you what the trades. You can see I'm doing a lot of hedging, traded September contracts, 300 to 95 put spread. This is the bearish debit put spread, closed it at 380, bought it at 250, and now I'm rolling that spread into October with the assumption that the volatility will persist to end of August and potentially begin first few weeks of September. So buying 300 295 put spread was the idea that we're not going to breach 300 level, even with positive news in the next few months. And finally, we have Active Investor Workshop. We're going to talk about today how to fix your broken trades. So every other Tuesday, please join us, register to get a recording and participate live in these Active Investor Workshops. And the link is tradespoon.com/workshops. And as always, please follow us on social media for all the latest market commentary and news. Thank you very much and have a great day.